computer. Welcome to Coffee with Kristel. And I really wanted to share with you guys um, my walk to get the coffee before coming back here because I do some construction around the coffee shop, the bakery actually, and I recorded it, but it's not loading so I can share with you guys. So we're just gonna go ahead and get started. So I did get a coffee. This is more of like what we call a latte in the US. Um, and it's a cappuccino with caramel. So welcome to today talk. I love how I'm putting the coffee in my mouth and at the same time talking to you guys. So, all right. So let's start with first one of the news that we have. And I'm going to change my background. So it might take a little bit of delay here. Of course, we all have heard. And if you haven't, here you are. So right here, mortgage rates are at the lowest levels that we've seen in years, but don't get it twisted. It's not because of what the Fed did today. So here's what most people miss. When the Fed cut the rates, people think, oh, mortgage rates are going down right away, or it's happening right in this moment of their announcement. So that doesn't directly change your mortgage rate. We've addressed that in the past. You can see a lot of people who share mortgage rates are driven by the bond market, and the bond market reacts before the Fed makes the move. So think about it this way. If you hear that your favorite airline is rising ticket price, I'm going to use airline because I travel so much. So you hear that they're changing the price next month. Are you going to wait to book it then because you just want to wait for a higher price? Of course not. You're going to buy your ticket today before it hits, for that change hit. So that's basically what mortgage market does, how it works. It prices in the news early. So even though the Fed announced a cut, mortgage rates barely budged. Why? Because in fact, they were steady over the last week. Good news, because we're back to the lowest levels that we may have seen in early 2022. It's like a long 3 years, right? So this is your window. If you've been waiting, this is your window. But I am trusting that many times that I've said, get ready. Don't just wait by saying, well, let me wait for the mortgage rates. Be ready with your credits, with your assets, with your debt to income ratio. Really know what you qualify. So when opportunities like now that we don't know the future, where it's going to look exactly, you are ready, as they say, to pull the trigger. You're ready to jump into the market. So it gives you access now to better affordability than we've had in years. So if you're refinancing also, I can run the numbers for you. I can see if it's making sense to make an adjustment in your first mortgage, or if you should still do a line of credit. So not all loans will say, hey, the rates went down. Let me go ahead and refinance. If maybe you had rates in the high fives, may still not make sense for you. So how can you find out? Of course, reaching out to me and talking about it. So let me ask you, would you use those lower rates to finally buy, or would you just use them to get down your monthly payment? So that means you'll go ahead and refinance into a lower payment, or you're going to refinance and cash out so you can consolidate some debts or do some other improvements. So now that the rates, you hear the rates are better since 2022, how would you actually move forward? What would you do? So I'm so grateful that I'm able to share this information with you because timing does matter. But the more you understand how these ships really work, the more confident you feel in your next move. And when I say timing does matter, it's also timing. Are you currently renting? It makes sense for you to buy and qualify based on and buy according to what you qualify for. So it's not about timing the market, but timing in the sense of like, okay, this opportunity is hitting and I've been working on it. Let me go ahead and move forward. So that's my first conversation, mortgage rates. Um, I'm just going to go ahead and remove my background so it can be actually. Oh, I didn't say go away, Kristel. Okay. Um, Let me just go into just a normal. It might just make the image a little bit clearer. Okay. Now we talked about mortgage rates. Now let's talk about my next topic. One that's very close to in the present happening. So, and I told you, like, I'll come on Thursday and think about the things that happened in the last week, so the last few days. So, if you're thinking about co-signing for someone's loan, be careful. It may come back to hit you in a way that you may not expect. Sometimes it can create some family drama. So, I'm working on a file right now that it's a mother and daughter. The mom wants to buy, and her daughter is co-signing with her. She has 3 kids, a son and 2 girls. And on paper, together they qualify for either FHA, conventional. It's easy file. She has enough to put 20%, but we're still doing a lower down payment. She wants to keep some of that money. So the mom wants to go ahead and buy. The youngest daughter is co-signing with her. But here's the challenge. Mom co-signed with another child years ago. So daughter bought, and she was a co-signer. And even though she doesn't live in the house, the mortgage is still in the mom's name until she refinances the daughter if she wants to remove her mom. So to exclude this debt, this mortgage is over $1,800. So it's pretty significant to be able to qualify with that payment plus your new mortgage. So to be able to exclude from the debt, the guidelines require us to prove that the one that she's on the mortgage with, the daughter she's on the mortgage with, provides 12 months payment history. The payment is coming from her account and it's not a joint account. Sometimes we have that challenge when it's husband and wife and we have the debt and we have to show it because they're on a joint account. In this case, mother-daughters are not on their bank account. So you say, hey, that's simple. Mom helped her the first time. Now she's going to help her mom. She's basically providing that she is the one making the payment. So there are 2 ways that we can go about this. 12 months bank statement to show that she's making the payment and the mom is not on that bank account. Or we can get a letter from the bank because this is the issue. She's like, I don't want to show why you're investigating my information. Why are you going into my bank account? Well, we have to show you are the only one really making the payment for the last 12 months, and we can rely on your ability to keep doing that. So the other option, since she was reluctant because the statement, actually, she didn't provide a statement. She provided account activity, but it doesn't show that she is the only account holder. It just shows transaction from her account with the last 4 of the account number. And I said, we'll need a letter to justify from the bank that this is she's the only one on the account. She's like, well, you guys are asking too much. Why are you asking all this? Do I need to remind you, even though I wasn't on the lender, that your mom helped you and provided a whole lot more to be able to help you buy the house? So 2 options. When you have a co-signer and now they need to show that they're not making payment, or you have a debt and you need to show that you're not making payment on that, your applicant, the other applicant, needs to show 12 months that you are not making. So it has to come from your co-applicant account. It gets a little bit confusing when I say co-applicant and all this. So basically, the daughter who's buying right now with her mom is, well, why can't you investigate? My mom is not making the payment. Yes, we can see on her mom's account that it's not coming out of her account. But what if she's still on the other account with the other daughter? So that's where we have to clearly document where the payment is coming from and that she's the only one, or at least the applicant that we have now, mom and other sister, is not on the account. So this is why I tell clients, be careful who you co-sign with. And it may feel like I'm helping in the moment. It's mother-daughter. It's a situation I want to help my family. And in some communities, they actually help friends who are just coming to the market. Let me help you. And they don't pay attention to how this is going to impact them. Sometimes the co-applicant makes the person who's truly responsible for the debt, gives them the money in cash and puts into their account. I can't show this person is making the payment. So the transaction is simple when whoever is really liable, meaning they're taking on this debt, is making the payment from their account. So be careful who you co-sign with because you are helping them, but when it's time for you to need their help, to buy your own home, we don't really know how that's going to impact you. They may just not be able to prove it, or they may just not be willing to provide the documentation needed. It sounds to me, it actually baffles me to see that the reverse is being happening. Honestly, we don't care about what the bank account is showing. Like, I don't even really care what money is going in and out of somebody's account. We just need to make sure there's not a debt. This person thinks that we're investigating. So it's a bit annoying because I feel like the mom really helped, and I'm getting really edgy with this. The mom really helped her, and now his turn is giving us a hard time in providing this documentation, which could potentially, well, if she doesn't provide it, we just don't have a deal. So the real takeaway is twofold. Be cautious. before co-signing. If you already have, be prepared and have this conversation to fully document the payment history when it's your turn to buy. So pushing back or withholding pages, because she sent like one page, she cut the top, and like you cannot alter documentation that's going to be placed into a mortgage if somebody's qualifying for 30 years. Like we're talking about over 250,000. I'm not going to person identify with themselves, even though I haven't said any names, but we're talking about a large sum of money that we're giving you. We have to document and cross every T. So pushing back or withholding pages doesn't really change the requirement. All it does is either not allow approval or it might delay it, which is probably what we're facing at this point. So have you ever been asked to go ahead and co-sign for someone? Have you said yes? Now, I love my brother, although he's not in the US. I always said I can help as much as I can. But co-signing with someone to me is a big deal. It's not I don't trust the person will do their best to make the payment on time, but things and situations do change in life. And if my co-signer or the person that's on the I'm co-signing for is not able to pay the debt, it's my responsibility. That's what it means to co-sign. I am putting my name and I am willing to pay for the debt if the person is not able to. So don't just give your name away and say, I'll go sign for you and help you. And when it's time to reverse it, the person is not willing to do it for you or is unable to do it. So just be very careful with that. So have you ever asked someone to co-sign for you? Have you ever co-signed for someone? How did that work out? And in many situations, it does work out. But I just want you to be cautious. So I'm grateful for clients who fight for um, the details and when they're getting qualified. But because like fighting back, well, why do you need this and all that? Okay, that's fine. But because compliance isn't a punishment, we have to make sure that we're providing all the documentation to get the loan approved. And that's why being approved early is key. I honestly did not think this would be a situation that we'll be in because we knew we would need documentation from her. But that's where we're at. So, okay. Now let me refresh my screen and see if my video of going to the coffee shop, it still did not upload in here. This is crazy stuff. All right. My next conversation. Oh my gosh, Kristel, you did not prepare I want to talk about an open house that's happening this weekend. One of my realtor partner, who is now with Accent Realty, which it's collaboration with Nexa. She does have an open house this weekend as I'm talking, so I realized that I did not download the information to share with you. A property in Loganville, 666 Cottontail Lane in Loganville. Shantae is not able to join the call right now, my live. A little bit more coffee because I'm taking kids to school. And this was last minute. I'm like, Shantae, you have this weekend. Let me go ahead and invite you to come on to my live. So bear with me one more minute so I can go ahead and download this. Two things I'm going to share with you about this property that it doesn't necessarily mean it's just for this property. It's really something I want to highlight as I show you the pictures. And I share my screen. Let's use this link here. Little coffee break. I'll go too far. Okay. So I'm going to share two topics. Not only the property, but also the an ARM, adjustable rate mortgage. So this property is in an area where there are a lot of new constructions. And of course, we know builders have amazing incentives that lenders, unless they are approved on their sites to offer financing, very often we're not able, it's very hard to compete. I mean, I think she said there was like $10,000 that they're offering, reduced mortgage rates. They often give 2-1 buy downs. And in my case, I actually want to share with you, and while this is coming up, basically the difference between an adjustable rate of 5-year fixed, so it's a 5-1 ARM. So if you're buying a house and you're torn, what should I do, 2-1 buy down or an FHA 5-year ARM? well, first you missed it because I've never heard of 5-year arm, which has been a while since we've actually really promoted that. So I just want to share with you why I lean a little bit more towards that versus a 2-1 buy down. So people get excited, you get an interest rate that's so much lower. Yes, it feels good because your rate is discounted for the first 2 years. But the truth is you are going to qualify with the actual note rate, and your first year is going to be discounted by 2 points lower than your note rate. So let's say, I'm not going to say rate because I have to put disclaimers. So basically 2 points lower. Then it goes 1 point higher, and then it goes into the market rate. So for 3 years, you have a lower rate, and then you qualify, you have to actually make a payment based on the note rate. So if you look at a 5-1 arm, it basically is fixed for 5 years and it adjusts after. Sometimes programs are set up with every 6 months, but most of the time FHA is going to be a 1 year, and it doesn't automatically go up or down. It could be the same, but you have a cap. There's a maximum that it can go up to when it does adjust. But a lot of times within the 5 years, people refinance. And that's what they tell you when you do a buy now. Oh, you refinance. Well, what if you're not able to refinance because you did not gain enough equity or you didn't make enough towards your principal balance to really make a difference to refinance into a lower note rate? The ARM, the adjustable rate is fixed for the 5 years, which we can do 5 years, 7 years, and there are more options. Some people can actually do 3 years, but that's a little bit riskier, I think. So you basically qualifying with that note rate, you're qualifying with a lower payment, and you have more peace of mind for 5 years. And there's no prepayment penalty, so of course you can refinance. So I feel like this is a great opportunity right now. And with this property, with the seller being pretty eager to sell, why is this taking so long to come up? There we go. So let me share this. Sure, I am sharing the property. So again, I'm one of the preferred lender with Shantae, and some of the images of this property, like I mentioned, the 5-1 arm may be a great option. This is a $549,000 property, and with a seller eager to basically sell, she has an open house this weekend. There could be some great ways that we can structure even that adjustable rate and give you a low payment. Very competitive to what a builder would potentially offer you right now. Very pristine. Look at this ceiling. I think it's beautiful. Well done as far as the staging. And that's what I wanted to talk to you about on the arm. And this is, let me go back. Description is a 5-bedroom, 5-bedroom, 4-bathroom. And you can see the square footage there. And the other aspect that I wanted to share with you, just to take an opportunity while we were talking about this property, that a $550,000 price point, when people want to do a down payment assistance, like, do you have any ways to help or assist? And again, because builders are giving so much from their margin of their profit, I do have creative ways with down payment assistance. And many people will say, well, yeah, but my income to be able to qualify for this type of home are probably outside the parameters of regular down payment assistance. And it is true because of income limits on many down payment assistance. So this is going to be a first and a second. So it's going to be 100% FHA financing with a first mortgage and a second. You know what? I'm just going to go back to the pictures because it's prettier than to see just a infographic. So let's see. I think we were in the kitchen. Yep. Um, so as I scroll through those images, I want to tell you more about this program, which I have several. Being with Nexa, I do have several opportunities and options through our different investors. One of them has a minimum credit score of 600, and some of them can be forgivable seconds. Some of them do have a repayment. Um, I mean, honestly, a lot of times I see like the one with the repayment is a better blend of the first and the second on the payment, but it's really depending on your situation, your actual. So a minimum credit score doesn't mean you're 100% approved. It doesn't mean that automatically you get approved. I talked about that last week. I had a client with 720 credit score with lates that were over 180 days on an installment loan, which would not work because it shows as a mortgage late. So a score doesn't guarantee, but it's a good place to start. Kids' rooms are staged pretty well. Again, this is a 5-bedroom house that Shantae has. And I'm going to probably do another live with her shortly where she goes more in detail about the property before the open house this weekend. So the other things that I wanted to share with you about the down payment assistance. So FHA is 96.5%. So you basically down payment is 3.5%. And I can go up to 101.5%. So that means you're getting an assistance based on 5%. Uh, remember, nothing is free. So it's not going to be the same market current rates that are, like I just said, market rates got better. This is going to be with a hit because you're getting 100% financing. So credit score, at least 600, like I mentioned. And you can actually also use sometimes down payment assistance. You can't, but this program you can use a non-occupant co-borrower, meaning somebody who co-signs with you and that's not as automatically moving to the house with you because they have their own residence, but you need their help to be able to qualify. I remember my first lesson, be careful who you co-sign with or who has co-signed with you. And yeah, so just wanted to share with you. Let me keep scrolling through this property. Oh, this will be my office. Love those they're called French doors. And this actually reminds me of my residence when I my office set up when I was married. Okay. So again, beautiful property. Let's go to again, this is in Loganville. This is Shantae. My picture is in the way of clicking away. And okay, in the area, you basically have a lot of things less than 1 mile away. Coffee, workout, groceries, ATM, gas for our outdoors fanatics. We have parks, okay, and great places to eat. And you can see here the schools. Okay, so I'm going to stop sharing my screen. Okay, so to highlight again, this is a property open house on the 20th. Connect with Shantae. I will tag her on this in the comments so you can reach out to her to learn more about the property. I will also upload, I'll put a link for this listing. And let's see. So I was talking about down payment assistance. So it's up to 101.5% financing. So up to 5% assistance. Plus concessions. I mean, you really can get into this house with almost no money out of pocket, but remember you have to give your earnest money. So you still need some money. So you have options. All it takes is having a conversation, see if this works for you. You may have some of your money for down payment. You may want to use some of it. You may want to just keep all of it for your own money for your move in so you don't use credit cards to furnish this beautiful property. So this is where we get to have a conversation about it. Does it work for you to do a down payment of 3.5% assistance or 5%? There is no income limit. That's why I wanted to stress that on this property because a lot of times down payment assistance have limits where you're not able to really go into that price range. Okay, so I'm grateful for programs, although I don't talk too much about down payment assistance because I feel like affordability makes it a little bit more challenging. But now that the rates are coming down, it may actually make sense for many to still move forward and get down payment assistance. So all you have to do is book a call with me. Let's talk about your options. Let's see if you actually could qualify for this type of program and what that looks like for you. And let's compare with whatever you may already be working with. Okay. One last topic. And I'm going to change my screen again because there is, let me see if, oh, she's already changed it. Let me see something. 1 second. So I'm actually going to download a different background and share with you now. And by the way, I do have Tuesdays, realtor strategy. So this is where if you see me doing live, you see me creating different ways of sharing content on social media. I am also a support coach for Tiffany Rose, and we go into a lot of ways to do one-to-many marketing. So I would love to share that information on Tuesdays with realtors. So if you'd like to learn more about it, let me know. Comment realtor strategy. I'll send you the link for Zoom. It's on Tuesdays at 10 o'clock, 10 to 1. Come with your questions, come with your scenario. I'm pretty good at listening to what your brand is, to what your audience is, and let's go deeper and opening your mind to possibilities, opening your mind to new ways to go about how you want to grow your reach to your markets to expand. So we'd love to see you there. Okay, so I also want to share with you a client that reached out. He reached out September 4th to be precise. And you can see, let me see if I point. Yep, right there. September 4th is when I started the inquiry with him. We did a soft credit pull. And then he waited until yesterday, and out of nowhere, he went back to his link and he started the process by applying. So waiting for the market to change is one thing. And this, just giving you a backstory with him, my client from 2016 who came back and bought his house, $160,000. Today you say, wait, 160, we can't really find this because now it's worth 371,000. And so there's over $200,000 in equity that he's had since he's purchased a home. He hadn't refinanced it yet since 2016. He has all this equity and he really could access more, but he decided to only go for what he needed. He has some medical needs, bills that he had to pay, and some other things for the house to make improvements, credit cards consolidation. So he basically is using this money for several aspects to kind of offload the pressure from some debts that just came, just had to spend on. So it took about 5 minutes to go over the information with him. He has a great interest rate. Again, he could have accessed more than $40,000 in equity. He decided to actually do a 10-year loan. I personally would usually say do 30 and make extra payment toward the principal because then your payment is less. And if you need to qualify for something else in the future, it's not really impacting too much your debt to income ratio. He does have a plan. He has another property he's going to sell and take the money and pay that debt off. So different ways and different mindset for people. Some people, mostly my foreign, because I also come from another country. We don't really like the mindset is not so much in getting into debt. It's like, let me pay it off right away and stay in the property and be debt free. So a lot of cultures, that's the mindset. American mindset is a little bit more the consumer mindset. You choose your mindset and you maybe program a certain way, and as you go through life, decide to make a change and a tweak. But this particular situation, he went ahead and got the verification. He started yesterday, as you can see timeline here at 110. He did a hard credit consent, so the credit got pulled. He some of those delays is actually him still thinking about, okay, I got my offer. Do I still want to go with it? Talk to his wife. And at 4 o'clock, we did an income verification, which basically the income verification is where he ties his bank account to the system. So it's called PLAID, P-L-A-I-D. Your bank is usually listed there where you can select the bank and then you do your online banking information. We do not get access to your accounts. All we get is a report. So your bank will send us a report of what we need to determine, is there enough income coming in? So that's where the income verification comes into play. Then he did select the bank that he was going to go ahead and use to go ahead and have the money sent into his account, transfer when he gets the $40,000. We verified his ID, so he basically uploads in the system his picture ID. Whenever you do those, be careful, or I encourage you to do it with a black background, so not something white in the background, like a black background. The picture comes up better. There's no the reflection doesn't come through. And also do as much as possible over the picture. Even in with mortgage, when people send their documents, they just send like over their leg, over their bed, their foot is at the bottom. Like this is like a mortgage you're applying for. Take the documentation and do either a cam scan. In this situation, I'm kind of going off track because I get irritated because I started in 2000 in 1999. People had to go to a fax machine. People had to bring documentation. The easier we get things done for clients, the more they expect it to be just less work. Come on, do a little bit of effort over the document. Scan it. Use this cam scan type stuff. Let's get it back on tracker style. So with the identity verification, he went ahead and verified it. You can see it takes a few minutes. And then he was ready, like from hard credit consent at 4 o'clock to signing. The documentation is getting prepared for signing, and then the note preparation. He is scheduled now to closing. You can see today is the 18th. This is live information, right? So he went ahead and scheduled his notary. Now, because it's a primary residence, he is going to go ahead and have a 3-day rescission period, meaning you're going to think about it, make sure after you sign, you have no buyer remorse. And then when the 3-day period goes through, the money is wired. This option of a line of credit, again, it took me 5 minutes less actually to enter the information, talk to him about his offer. Then when he was ready, he pulled the trigger, completed, and you can see from this timeline how quickly he was able to get his approval and the money. Another thing, the money's going to come to his bank account. Another thing I want to point out in these last few days, we were only able to use before personal bank accounts. Ding, 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 ding. We now can use bank statements from a business account. So we will look at the deposits. I do not review any of this information. This is computer generated. And I do have this option as well as another one when it comes to my HELOC. So don't just think it's only one way. There's HELOAN and all that. There are multiple options, even though the rates are better. For some of you, you may still not want to touch your first mortgage rates that are in the 3s or 4s and get access to this line of credit where you are consolidating debts, home improvements, taking the money and investing to another property, one that you're going to be moving in or one that you're going to be doing as an investment. So there's so many ways. So I would say one aspect about me is when you have a goal and you're like, I just don't know how to go about it, and you kind of shrink into your goal, I actually expand you into, let's talk about it. Let's talk about the possibilities. And you still have time, no pressure. Just want to share with you and educate you on what you can do. So I have a question. What will you do with $40,000 right now? If you have equity in your home and you had 40,000 or you could pull more, what would you do? Will you use it to consolidate your debts? You want to make sure that, the interest rate on this is going to be improving what your actual payment is going to be, your cash flow. So if you have a 0% interest rate on your credit card, you may not actually do this, of course, right? So we go through the numbers. It's not automatically, let me just go ahead and do this. But keep in mind, let's say you have access to this line of credit. You send the money back and say, I don't need it right now, or I only need it $10,000. You still have, when you do this 30-year term, you have 5 years to access back the money and use it like your bank. So you don't need to use the full amount right now. That's why I tell clients, go a little bit over what you really need, just in case something comes up in a year or two that you need it for HVAC or you need it for unexpected expenses, or rates went down and you want to pull the trigger and you now have access to the line of credit. So tell me, what would you do with the $40,000 that you access in the equity in your home with a much lower interest rate if you were to get a personal loan, most likely, or even using credit cards? Okay, so I'm grateful for this opportunity to share with you all the different things that have come up in the last few days since last week. And yeah, would love to hear what your questions are. I do have fun with those coffees. Just check if my upload of my little, I might just have to just upload it after the fact of my coffee that I want to purchase. I'm like, let me be creative. Let me do this. No, it's still not showing. Sorry. I had also promised myself that I was going to go ahead and take a deep breath during my life. Because although this is a live, yes, I have some specific topics I wanted to share with you, but I also want to be into the space of what is it that source, higher self, God, the universe, whichever terminology works best for you, but really allowing myself to go within and share. And putting myself on the spot because this is a practice that I'm doing for myself. What message would I like to share from my heart, from this divine place? So what's coming up is, as you probably know, I have been I've been home, Guadeloupe, for a while now. And number one reason for me coming back was my grandmother who celebrated 102. My dad's birthday is that month also. And needed to be close to family for some health situations close family members have had experiencing and all that. And it's been at time very challenging because I haven't been home for this extended amount of time since I left when I was 17 to come to the US, to Atlanta. So the customs, my mom gracefully added an AC, which where I was able to close all my doors because as I work, I had to really work with just a fan. So it's very different from America. Mosquitoes biting me when I'm talking to you. And um, the internet connection not as strong as in the US. But I'm super grateful for the opportunity to be home. I'm not moving back. This is not like Kristel has left the US and moving back home. This is a temporary um, season, like many of mine have been since 2023, where I explore different parts of my life. And I explore, I really want to remove this because this is not about, just do none. Okay. Um, so different parts of seasons of my life where I have really expanded in the definition of what love is, what love feels like, and really a connection from really authenticity, depth of self-love, and not just repeating those words, but embodying them, experiencing them. And at times they can be challenging because it's one thing to go from the head and the logic. Of course, I love myself. Of course, I'm authentic. And then you're like, okay, I still have a mask about this. I still have this about that, right? So it's really going from the head and the logic of how much I get to share, how much I get to, and authenticity doesn't mean everything gets to be shared on social media, at least not for me. It just means to really allow myself to come from this place of here, of the heart, of the space of love. And I've been triggered, I've been hurt, I've been sad, I've been excited. Like I've experienced so many of the different emotions. And I genuinely say it's all perfect because I knew that coming home, that it would be different. It's a different culture. We're talking about a French culture versus an American culture, talking about so different aspects, family, so many aspects of life that are hitting me, but in a way that coming home, which is why I call it Sacred Home with Kristel, coming home after I left from high school and experiencing this season has had triggers. And so many blessings because I know it's expanding me. So my invitation, um, because a lot of times I hear in the word boundaries, which healthy boundaries are definitely necessary. Um, but to cut off family members, and even after my divorce, that was never my intention to cut off someone. Now, I'm not in daily conversations with certain people, and it's really because we're no longer in resonance, but meaning that the connection is no longer there or is no longer serving. But it's also from a place of respecting their path and me respecting mine and honoring mine without feeling like I'm draining myself to sustain that relationship. But I still love them. I don't have hatred for them. I just don't necessarily have a need to be in that conversation or in the exchange. So whenever I decide or I choose to no longer be in a particular relationship, and not just relationship, but just in a different environment, I think that's a better word, environment, then I do it from a place with the intent, even though at first it may just be a cutting off just so I can move forward. But my heart is filled with gratitude. And it takes a moment to go through that process of going through the pain, the suffering, the sadness, and all this to the gratitude of the experience with the person, the experience, the lesson that I got from having had that experience with a person. Even with clients, with some of the situations that sometimes make things harder than really necessary, it's an opportunity to see where I could do differently, I could do better, and also accepting. It's a big thing is to be able to accept and sometimes like "Well, I can do this and I can fix this." It's not always about fixing. It's what is that prayer? God grant me the discernment of what I can change and what I get to accept. So that's the message that comes through for me right now. Um, the journey of life and growth, because I'm definitely a growth mindset. And some are not, and I respect it. It's just a little bit more challenging when somebody's like me to be in fixed relationships. Now, I was learning, accepting it, and seeing it that it is beautiful because we do need that anchor of who that person is based on how they are. So that's another part that I get to also keep on expanding and not expanding, not expecting for the person to be more of something. And very often when there is a break, when there is like a letting go, or even me being back home versus in the US, there's a comparison. There's so much that we go through. And I'm in a place of how do I heal and also accept this is how it is and forge a new path or a new way from peace, from love, from understanding that makes it feel, I won't say manageable, makes it feel harmonious, harmonious. So this is my attempt to come through and share in the moment. I don't prepare this last bit. It's more of coming through as an unconditional love uh, being who's experiencing life and going through life by design as I forge my way through, oh my gosh, as I'm getting closer to 50 in the next few months. So thank you so much for being in this listening and would love to be in conversation with you and hear your goal, your stories. How can I help in the mortgage, in other aspect, as a realtor, as a partner in life? Let's create and co-create. Again, thank you for being on this live Coffee Talk with Kristel. We'll talk real solutions. Thank you. Have a wonderful Thursday.